For more on what's next for the company, let's bring in Oppenheimer Managing Director of Internet Equity Research, Jason Helfstein. He's got an outperform rating, a $70 price target on the name. Jason, great to have you with us.
Thanks.
And you did cut the price target, correct, on the back of that 30% drop on the back of earnings?
We did. Our price target's 70 now, which would still be like 25, 26 times next year's cash flow. So still rich, but stock is 18 now, app 11, which kind of is the darling now of the sector, is 26, and Roku is trading at about 21 times. So, Meta's 15. Really the question is, you sit here and you look at how much the stock's been hit and you say, could it go to 15? Yes. But it just feels like there's much more likelihood the stock will be back, well over 20 after the next quarter.
There seems to be, though, maybe it's a messaging problem. Let's say that you're right and the bullish thesis is still intact. A lot of analysts walked away, and a lot of investors walked away from that earnings call, believing that management basically dismissed Amazon as a competitor, when Amazon does seem like it would be a competitor in this space. So what are your thoughts on that? Do you think that the company should worry about Amazon and isn't? Do you think that the company is more likely to partner with Amazon? Where does Amazon play into its market?
Sure. The digital media space, digital app, is quite enormous, right? Look, technically, Meta, Google, these are all competitors, right? The real question is Amazon's DSP, right, which is one of their kind of 3 ad businesses, is that a direct competitor? I think they need to acknowledge a bit more the risk around certain categories like CPG. So they've said that auto and CPG is a third of their business. So let's just say half of that is CPG. So we're talking like maybe 15% of their business, 15, 70%. That business is probably at risk because Amazon has great data on what CPG, right, consumers buy. But Amazon does not have great data on auto. They don't have great data on financials. They don't have great data on telecom. They don't have great data on travel. So ultimately, I think there is some risk to Amazon, but I don't think the risk is significant. And I think there's just another point. It doesn't make sense to use multiple platforms. So Trade Desk is a demand-side platform. You should use one, not multiple, or you give up efficiencies if you do that.
Jason, I get the valuation is a problem in Trade Desk. I didn't think the quarter was a disaster. Maybe the guidance scared some people. But let me ask you this. If they can sort of implement AI and sort of re-ratchet margins, new CFO, does this begin to look interesting again to you?
I do, but I'm not sure, how much of it is going to be, let's say, margin driven. I think this is really more sales focused, right? Like just people focused on that 5-point decel in the second quarter, and then kind of guiding for another 2-point decel. And again, to your point, there's been a number of management changes. It's not just CFO. The head of their sales left. I think they dismissed, call it 6 weeks ago. They appointed a new COO at the end of last year. Never had a COO before. So yeah, as we titled our note for the quarter, not executing at peak levels. We think a good amount of this is self-inflicted, but really where, they need to show more progress is with this new operating system. They call it Kokai. And Kokai is supposed to generate 20% better revenue for them, but also better performance from their advertisers. So you ask, why did this Walmart news come out, right? Some of it's like a pylon. I'm sure Walmart would like to pay less. Is there some negotiating going on, kind of rates and fees behind the scenes potentially? But ultimately, I don't think anyone has a better mousetrap in the market right now for brand performance, which is really what it is. It's being able to measure brand advertising on the internet.